U.S. private equity firms are reportedly struggling to try and find ways to spend the record amount of cash that they're sitting on. According to the Wall Street Journal, U.S. buyouts by these firms hit just over $155 billion in the first 10 months of this year. But the cash levels for those North American buyouts have hit a record $771.5 billion. The Journal cites already expensive takeover candidates getting more costly as part of the cash buildup. Our guest host today is Tom Farley. And Tom, it is kind of phenomenal looking at the premiums that are being paid to take out companies. I guess it makes these buyout firms a little more nervous, saying we got to make sure the math works before we can make a purchase here.
Yeah, the industry has changed. I mean, the whole game 20 years ago was you buy companies for actually a lower multiple than they would otherwise trade in the public market. Now it's, let me find a company in the public market, pay a premium, take it private, and then you really have to run the business perfectly. I think this year M&A activity overall in the United States is about equal to last year, but private equity firms are raising so much dough. I mean, Blackstone raised $25 billion in a single fund this year. That's just one of Blackstone's many funds, and you keep hearing numbers like this. Vista also raised a giant fund. I think it was 16 or $17 billion. So it's hard for them to deploy all that capital.
It reminds me a little bit of Berkshire Hathaway, and Warren Buffett has $128 billion in cash in hand, at least according to the latest SEC filings. They're looking for ways to kind of deploy it too, and in some cases even butting up against private equity. Tech Data is a company that got taken out by Apollo. Buffett came in and bid over that, and then Apollo bid over that. So he's still kind of holding back, but you can see him kind of stepping into places that they hadn't before. It's just harder to find good deals, I guess.
I think it's a microcosm of exactly what we were just talking about with private equity. So Tech Data, Apollo makes an aggressive bid to start, paying a premium for a large public company. Warren Buffett comes over the top with a bid that's substantially higher. I think it was 6% higher, all cash.
From $130 a share to $140.
$130 to $140, and Apollo within a few days came back and raised it another couple percent to $145. There's just so much money sloshing around that even Warren Buffett, paying all cash quickly, paying a full price, can't get a deal done.
Kind of interesting to watch in the markets. Having said that, people will still look at stocks and say, okay, they're not necessarily overvalued. Buffett has made the point earlier this year. He told us that the premium you're paying to take out a whole company is much higher, but he would still much rather buy stocks than ever put money in treasuries, just because you look at rates being so low and you look at where stock prices are, the valuations could go up even from here.